Sorry, folks. I got my Christmas shirt because, yeah, I'm celebrating early because it doesn't matter what happened today. It doesn't change what is coming for AMC. All right. And I already shared with you one of the reasons why I think AMC did not pop today. But in this video, I'm going to cover with you actually, what I mentioned on some of the videos yesterday based on these, hedge funds, including those, like Anchorage, which for shorting AMC started to get out. And actually we could see some other, big guys with the deep pockets, the suits or another institution started coming in and buying and going long on AMC because that will be one of the best way to make a lot of money in the very short amount of term. I mean, the very short term. All right. So getting to the video. All right. Before getting into that, let me explain first something here, guys. Let me share something here first. You see that Nasdaq has dipped 2.5% today. At some point, it was really close to 3%. Based on what happened yesterday with the inflation? No, not at all. It doesn't make any damn sense. Give me a second. This is not alcohol, folks. This is a mocktail, all right? I have ginger in it, ginger beer. I have some cranberry syrup, what else? And lemon. 3, and then it's pretty good, all right? Now, the fact that the Nasdaq is dipping today might give us a little bit of indication on why to be bullish AF on AMC. Because do you know who is loving the tech sector? Do you know who since 2020 was only buying companies and stocks on the Nasdaq? All right, the Teslas, the Neo, the Lucid, the solar companies, the hedge funds. These are the most loved and favorite companies of pretty much every single hedge fund out there. All right, but these are companies that mostly are not profitable yet. I mean, I'm not talking about the Teslas, all right? But most of these high growth companies are companies that are trading based on the potential future money that are going to start making. And because people are so excited in that, because it's either revolutionary or, very, smart as an idea, as a business, they are willing to put the money now and wait for it to reach that level in maybe 2 and 5 years, all right? But in comparison, when you actually look at what the Fed said, if interest rates are going high and higher, it seems like you're putting money into something that is empty. And usually you're putting that much money on margin, all right? And because money is so cheap or used to be so cheap, and it's not going to be the case anymore, people tend to freak out because it means, hey, I may be losing some capital here. I may not be able to do as much return on that money, especially if those companies are not making that much money, because in order to make money, they will need to also go and use leverage. And if money is not that cheap, it's a problem for those companies, which in returns means problem for me, because there's money to be made elsewhere. And that's why people tend to freak out and they're selling stocks from the tech sector. But this might be good for us because who are the most short seller in AMC? The hedges, right? So this might also hurt their portfolio, especially when we have at least a couple of them considering selling everything and returning the money to the clients, all right? So that's number one. Number two, all right? Number two, let me share this with you. On December 14, that was 2 days ago, all right? UBS Asset Management Americas, because UBS is a Swiss bank, but pretty much, big bank across all the globe. They disclosed that they are long, okay? So they bought 1.3 million shares of AMC. That's a quarterly change in shares of plus 200%, folks, worth $52 million. 200% plus increase net change quarterly. Do you think it's a coincidence? No, I don't. I don't think it's a coincidence. Je ne pense pas que c'est une coïncidence. No, simply not. You know why? Because yesterday I shared with you that I wouldn't be surprised if hedges who have been losing money short selling and forced now to get out of that short selling positions in order to save the name, in order to save the face and the reputation of their firm, and keep the clients invested in their funds. They needed to find something that will make them money. All right. And AMC is one of the highly discounted stock on the market right now, given the amount of potential based on everything we already know so far. So it's not a coincidence that right after those hedge funds disclosed, even way before, boom, UBS saw through it and boom, they went in with $52 million worth of AMC shares. If AMC was really going down to, I don't know, $7, or even if AMC was really going down to $5, do you think these guys are crazy enough to get here, even if it just was to lend shares? Would you lend shares to people who are losing money? It doesn't make any damn sense. Why would you do that? All right. So to me, if you ask me, bullish AF. All right. Bullish AF. So as always, it's not because, we know things or we expect things to happen the way they are supposed to, that's going to necessarily happen the next day or next week. It will take some time because they need to process all of this. They need to make sure they don't fall out, even though they're already falling out. So let's just be patient, and it's going to come. It's going to come. It's inevitable. All right. It's inevitable. So, yeah.